Hello everyone and welcome back. In today's episode, we're going to answer a very basic question. What is trading? Before we start talking about charts, strategies, candlesticks, or any other concept, we first need to understand the foundation. So, in the literal definition, trading is the act of buying and selling financial assets in order to make profits. That's the basic idea. You buy something, the price moves, and if you sell it at a better price, you make profit. But if the price moves against you, you can also take a loss. For example, imagine you buy an apple at $2 and later you sell it at 2.50. The difference is 50 cents. So you made a profit. But if you buy it at $2 and later you sell it at 1.90, then you lost 10 cents. But now we have another question. When we say financial assets, what do we actually mean? There are many types of financial assets, and as a beginner, you don't need to master all of them immediately, but you need to know what they are. The first one is stocks. A stock is basically a share of ownership in a company. When you buy a stock, you own a small piece of that company. For example, Apple, Tesla, Nvidia, and Amazon. The second one is crypto. Crypto refers to digital assets like Bitcoin, Ethereum, and Solana. Then we have forex. Forex means foreign exchange. It is the market where currencies are traded against each other. For example, Euro USD, GBP USD, and USD JPY. Then we have commodities. Commodities are raw materials or natural resources like gold, oil, and silver. Then we have futures. Futures are contracts based on an asset. Examples include Nasdaq futures called NQ, SP 500 futures called ES. And then we have indices. An index is basically a basket of stocks. Instead of trading one company, you are trading a group of companies together. For example, Nasdaq 100, SP 500, and Dow Jones. There are also other instruments like ETFs, options, bonds, and CFDs, but the important thing is the same idea, different markets. Traders try to profit from price movements. Now, after understanding what trading is and what financial assets are, the next question is, how do traders actually make money? There are two main types of positions a trader can take. The first one is a long position. A long position means you buy first, expecting the price to go higher. So if you buy at a low price and sell later at a higher price, you make a profit. But there is also something called a short position, and this is where many beginners get confused. A short position means you sell first expecting the price to go lower. You may ask, how can I sell something before buying it? The simple idea is, in financial markets, your broker allows you to sell an asset first, then buy it back later. So if you sell at $100 and later price drops to $90, you buy it back cheaper and keep the $10 difference. That is how a short position makes money. As example, imagine you borrow a phone from your friend and sell it for $100. Later, the same phone becomes cheaper, so you buy it back for $90 and return it to your friend. You keep the $10 difference. So to summarize this episode, trading is the act of buying and selling financial assets to profit from price movements. And this was episode 2 of Trading for Beginners 2026.